Huge week coming for Tesla stock. Oil going to negative. A monster option bet put on Tesla. What is going on? I'll tell you what I'm seeing and what my game plan is for Tesla stock this week. And you can copy off my paper right now. Welcome back, everyone. In this video, we will cover the huge week that just happened, what the key takeaways are from it, and I will lay out my strategy for the coming week. And if you are like me, not the coolest kid, or you have a crooked head that makes your glasses crooked most of the time, guilty, but you want to build real wealth alongside a real person, go ahead and subscribe, hit that little notifications bell, and while you're down there, go ahead and give the video a like as well. Why are you guys looking at me funny? Is it my fresh haircut? So let's recap the prior week. Monday, the Dow was down almost 600 points. Tuesday, the Dow was down again over 600 points. Wednesday, the Dow was up 456 points. Thursday, the Dow was up another 39 points. And Friday, the Dow ended up again another 260 points. So let's do some super technical analysis since I know you guys missed it last week. On Friday, someone dropped $3.3 million for Tesla call options for January 2022 with a strike price at $1,500. Holy shnikes. Shout out to Goodfella21F who pointed it out to me in the comments section of one of my videos. Now I know some of you guys trading these and are very familiar with them. But real quick, for those of you who aren't that familiar, essentially this person is making a bullish bet on Tesla that it will be over $1,500 by January of 2022. Yes, there are lots of us out there that think Tesla will be that before that time, but are you willing to put $3.3 million on it? Let me explain why this is different than just buying the stock now at $700 or so and just holding. This trade can go one of three ways for this person. The price can reach $1,500 plus whatever they paid for the options by January 2022. We'll say for this example that they paid $75 for those options. So the stock hits $1,575 by January 2022, and they break even. But if the price never reaches $1,500, they lose the entire $3.3 million. Even at $1,499, they still lose it all. And then you have the other side where if the price can go over $1,500 plus the $75 they paid for the options, then they can make 2x, 3x, 4x of the $3.3 million that they put down for every $75 in stock price over the $1,575 that they need to break even. And yes, understand I'm completely oversimplifying. They can sell the options, they can do a lot of other things. But this is a massive gamble. Tesla goes all the way to $1,500 and you lose all your money? $3.3 million? So the super technical analysis is, I don't have the guts for that. What are my takeaways from the week? There are really three big takeaways from this week for me. First, record unemployment continued. The record decline in unemployment continued. Thankfully, the pace slowed a bit to only 4 million people. But don't take that as a positive. Just look at this chart. It's still unprecedented and just crazy. So this means there are roughly 26 million new people out of work right now since this all started. And remember, we only have roughly 157 million total workers in America. So that means the unemployment rate could be at 16 to 17% right now, and maybe as high as 19 to 20% if you include the people that were unemployed when this all started. It's now reaching a point where we need to forget about the Great Recession and start comparing it to the Great Depression when we're talking about unemployment. Unemployment just briefly went over 10% during the Great Recession. Again, look at the chart now compared to the Great Recession. It's just staggering. We are rapidly approaching Great Depression numbers. It's just insanity. But stocks are pretending like this has zero effect on companies. Even if a cure is found by tomorrow, it's given to everyone by this weekend, it will still take months, maybe even longer to get the economy going again. And that's with a completely unrealistic, super positive pie in the sky scenario. In reality, a lot of these businesses just aren't coming back. And many of the businesses that do make it back will not go on a hiring spree. Everyone will be busy shoring up their balance sheets and paying down the debt they took out to stay afloat. Lots of companies took out debt at 10+% interest just to get through this time. And some companies have figured out they can operate with less employees because they were forced to. So now if things do somewhat normalize, they'll be more profitable. Why hire the workers back? I'm not trying to be insensitive here at all, but that is going to be the reality for a lot of businesses. Those executives' jobs, especially at the publicly traded companies, is to increase shareholder value. If you can produce the same results with fewer employees, then you are increasing shareholder value. It's why you see stocks rally sometimes when they cut employees. The market is taking it as a sign they will be more profitable. But let's put aside business hiring for a second. The fact is we are a consumption-based economy, and I don't think people will just freely go back to our spend happy, cheerful ways, which in the end is the only way to get our economy back to normal. In the end, I would love to see all those people go back to being employed, but it's just not going to happen. At least not quickly. Same goes for the spending in my opinion. It's just going to take time. The second big thing that happened this week, oil dropped down below zero. Another first that I thought I would never see. And this week the market moved almost exclusively on the price of oil. When oil was down, it was down. And when it rallied back up, the market rallied back up as well. Understand completely those were just future contracts on oil and expiring contracts on oil. Most of them have already expired that went down below zero. But oil futures are down across the board for the upcoming months. Oil reserves have virtually maxed out all the storage capacity in the entire world. It's not like you can just build storage for millions of barrels of oil. So what happens next? Remember, oil is traded on the free market, but it's manipulated by some big players. And I'm not sure what Russia, OPEC, and some of the others are going to do. But I do think there is a bigger play going on here with those two. And it's going to hurt Tesla in the short term, but really benefit them long term. I'll link the video I just did that lays that all out for you at the end of this video. But I do think there is a play here with oil, so more to come on an oil play. And the third thing, Wonder Drug from Gilead did not have a good week. Still don't know if I'm saying that company name right or not. I'm sorry. Gilead released news that they had a promising new drug that is working against the illness last week. And the market skyrocketed on that news. But I told you guys to read more than the headlines. The drug wasn't even part of a clinical trial yet. And I may have alluded to the fact that maybe someone released some good news to get the stock bump while the market overall was rallying. But again, no one would ever do that, right? Nope. And so the drug was understandably pushed immediately into a clinical trial, where it immediately flopped from the reports. Understand that there is now conflicting information on what really happened, especially coming from the company trying to do damage control. But this is why I don't pay attention to the news or the headlines. And when I do, I read thoroughly from multiple sources. And then I use my brain to form my thoughts on what I'm reading. I'm just interested in facts, not somebody else's take or opinion. The news media on both sides is really good at intertwining facts with opinions, and then presenting the whole thing as fact. In this case, the facts were the drug hasn't even gone to trial yet. So basically it's had about as much testing as 1,000 other drugs that never even get to the first stage of testing, much less make it to the market and are successful. But Wall Street rallied, and I think this shows just how disjointed and out of whack this market is. Typically, Wall Street has better information than the rest of us, but it looks like they are grasping at straws as well, looking for anything positive. I only point this out because I want you guys to dig deeper on what you are seeing and hearing. I really do hope they find a drug or a vaccine fast, but I refuse to trade based on speculation. It's like gambling. Eventually you will win, but you are on the losing end most of the time. But how many people do you know that say,
I always win when I go to the casino?
Really? Casinos aren't built on winners. So if you don't want to gamble your money away, make sure you subscribe and hit that notifications bell. What? Why are you guys still looking at me funny? Okay, fine. I got a new camera and I've been experimenting with a new setup here. So if you notice the new setup right away, go ahead and crush that like button right now. And let me know down in the comments what you think. Expect to see more things for you from this channel in the near future. So be on the lookout for that. And no, I'm not getting plastic surgery to fix my crooked head. Sorry. My strategy for the week. Copy off me if you like. As always, this is for entertainment purposes only, as I am an idiot, so don't listen to me. So there's really not much going on this week. Not much action going to take place at all. Just another boring week for Tesla. Really? Earnings call will be on Wednesday, and I think Tesla is going to move bigger on that information than any stock will during this particular earnings season. I don't think there is a mainstream stock that has enjoyed a bigger run than Tesla coming into their earnings call. And no stock out there moves more exaggerated than Tesla, either up or down in the first place. And what is said in the earnings call will really help me lay out my trading strategy for the coming month. If Elon does not adjust his targets, It's a huge positive sign that April, where virtually the rest of the world's economies were shut down, did not hurt Tesla that much, which should be a pretty good predictor of how future months should go as this all drags on. Having said that, something curious did happen this past Wednesday. Tesla was downgraded by Bank of America from neutral down to underperform. And they also lowered the price target down to $485. So now we have Goldman Sachs with a price target of $864 and Bank of America at $485. And that perfectly illustrates my point about this stock being such a wild beast up and down. Yes, analyst calls on stocks can be wildly different, but what you will notice is that the big boys tend to be relatively close or at least in the same ballpark. And you typically have smaller players like Jefferies making bolder, more outlandish calls. Those small players need to make bold calls in order to get attention or just to make names for themselves and try to compete with the big boys. But the big guys don't have to. But you are seeing the exact opposite being laid out for Tesla. It's the big boys that are all over the map, and this is what makes the stock so much fun and stressful to trade and follow. So back to the trading. I will not be buying any other stocks this week unless I decide to make an oil play of some sort. The more I have studied, the more I am seeing signs that the market is already overheated again. And I do think another correction is coming. I'm working on that video right now, so expect to see it next week hopefully. If not, then the following week for sure. And as far as Tesla goes, it's a little different. We have discussed it at length, but I already adjusted my strategy for Tesla to trade differently than any other stock I've ever traded. Traditionally, I hate trading around earnings calls for a very simple reason. Sometimes earnings calls are great, and the stock still goes south because it's already been baked into the price, or any of a number of other games that large players play around those calls, creating lots of price unpredictability, or you can't predict the price. Whatever, you guys know what I'm saying. But Tesla is moved largely by the retail market, so I think it will move up or down based on the strength or the weakness of this earnings call, regardless of what's priced in. So I will be looking for an opportunity to buy a few shares this week to take advantage of another run up if the call is very positive. I'll post those trades and any oil trade I make immediately on Patreon like I always do. But if my Tesla trade goes bad, I still think this is a $1,500 stock in 2 to 3 years. And I'll just own a few shares at a higher price point, and I'll buy more shares as the price goes down. In the end, I'm still more than happy to double my money. But remember, you need to know more about the oil problem I see coming for Tesla. So click this video right here to get more information on that. Thanks.